Welcome back to Milk Business Conference here in Las Vegas. All right, talked a lot about demand, exports, all of that in the first roundtable. But Roland, let's start off by talking about feed prices. Held very strong this year. We saw grain prices, a really good year overall for grain prices, but for dairy prices in the room, that's been a pain point when it comes to feed prices. What is Rabo's expectation for grain prices as we head into 2023?
Yeah, we're actually pretty bullish on grain prices. We think next year, average-wise, feed prices for dairy could come down by 5 to 10%, and really that's not much given how high they are today. So we expect corn, for example, to likely average around that $6 range through 2023, just as a good example of a proxy.
Mike, what are your expectations?
I tend to agree, and as we interface with our grain clients, what we see is, given the higher cost of production, which through the Midwest we're gauging somewhere between $5.50 to $6 on corn, to incentivize that corn planting, we're going to need to see prices at those levels to make it go in the ground. And with a tighter balance sheet, ultimately I think there's enough of a speculative play to keep things afloat at these current levels.
Well, Dan, I don't have to ask you if you agree, because I know you don't agree. So what are your expectations for grain prices in the new year?
I'm wearing claws today. So, yeah, as you think about the grain markets, we're a little more bearish, and I think it's due to the slowing U.S. export potential. I'm a little concerned about ethanol, which has no growth, and then I've got this monster, and I mean it's a monster soybean crop growing in Brazil. So as I think forward, if we don't have a weather problem in Argentina, I believe that next year December corn can trade well under $5 a bushel, and that there will be relief to the U.S. dairy farmer. In particular, as all this new crush facility starts to come online in the fourth quarter of next year, meal prices should come down because of renewable diesel. So as we see it, we're starting to turn relatively negative, Tyne, on the outlook for feed and grain.
Roland, are there any caveats there? I mean, you guys said that you were pretty bullish, at least to maintain at these levels. So is it the situation in Ukraine? Really, what do you see as the biggest support factor for grain prices this next year?
Yeah, big support factor. Mike mentioned some of it. That is the incentive to get it planted. When we look at our models and we look at the acreage restrictions in the U.S., for example, I mean, we've got a lot of acres planted. When you look at historical acres versus what we have today, there's not a lot of room to do a heck of a lot more. So that's one of the most bullish factors. And I think Dan mentioned, I think the important caveats there. Like I said, so far Brazil, planting weather has been ideal. So that's a piece of the puzzle. And we absolutely agree on much lower meal prices for the foreseeable future, for years, as all this crushing capacity comes online.
Agreed. And as we look at South America, there's no way around that conversation. Acreage is going to be up. They're going to have a great potential there. We have to get it through the next 2 months of weather to really put an exclamation point on that. And so we're certainly watching that, and I think that's why we've been able to continue carrying a premium in soybeans, despite some of that very material fact. Bottom line, though, on the corn side, though, 80% of the U.S. is in some form of drought right now, and I don't think we're going to be able to get off the gas pedal on keeping prices where they're at. If we can grow a great crop in the United States, I can start to get behind some of Dan's comments, but we have a 1.2 billion bushel balance sheet, and we haven't proven that we're going to be able to raise a crop yet. So we've got to get that taken care of as we go forward into 2023, and if we can do that, then we can start to bring prices down.
Well, and the drought had an impact on the cotton crop this year, and we know that impacted the amount of cotton seed available for feed and things. But you look at cotton prices today, there's not a big incentive to plant cotton at this point. So where do those acres go?
Well, they're going to go to, we're talking about the Delta. They'll go to soybeans, or they'll go to another minor oilseed, or maybe even corn. But, my problem I have today is that Ukraine in the Black Sea is going to export a record amount of wheat, and they're following behind corn. So as long as that corridor stays open, and Ukraine's offering corn so cheaply now, even with the Board of Trade, Brazil is going to export 7 million tons of corn this month. I think as you look down the road, we're just non-competitive. And so my problem is the domestication of the U.S. grain industry, Tyne, and that we need to fall to where the rest of the world is.
Roland, what is your advice for farmers in the room today as they look at some of these unknowns for 2023?
Yeah, absolutely. Somebody said it best. The train that you can see coming usually doesn't get you. As far as locking in feed, take advantage of the dips in feed prices as we roll forward in the coming months. and do some hedging on those opportunities, that's going to be critical.
Mike?
I would offer the same, and the reality of it is maintain a spirit of flexibility in your risk management. That's the one thing I would drive home, because I don't know about you guys, but the reality of uncertainty isn't going away in my world anytime quick, and we all share the same world. So be flexible in how you approach these things.
Dan, what do you want to leave them with?
Everything costs more, including the doubling of your interest costs into your head as the central bank is doing what it's doing. Know your cost, know your margin, lock it in when you can, at least on 40 to 50%, because this is a year that it's not willing to gamble on a lot higher prices, whether it's milk or grain.
All right, thank you all for joining us. We appreciate it. We need to take a quick break, and then we'll be back with much more U.S. Farm Report in just a moment.